I want to continue taking a look here at crude oil and the WTI product, but I want to bring in David Williams here to help us add to the focus here being on the technicals. Take a look at some of the key levels he's got with us. He's got his radar on. David Williams joining us this morning from Page Trader. David, good to have you with us. Happy Friday to you. Before we get into the technicals here, I want to talk about the WTI inching its way back up to this 75 level this week. And David, what's this telling us in terms of the fundamental narrative?
Yeah, so good morning, Ben, and nice to be here on the last broadcast day, or one of your last broadcast days. I wanted to say something about that initially, which is that, the November 2023 decision by the 13-member cartel to further slash oil production into 2024 is not a small thing. OPEC is seeking to maximize the value of crude oil reserves for all of its member countries. And so this is something that we've seen many times before. This does put upward pressure on crude oil because slashing the supply can alter the prices. So at this point, we still believe, and if I may say so, that just from a fundamental basis, we have some support coming through this OPEC decision.
I like that because initially the reaction was somewhat muted, right? Fairly limited. In fact, prices came off after OPEC announced larger than expected cuts, and in a counterintuitive fashion, we talked a little bit about that, how sometimes that kind of gets priced in, or how price can be somewhat random, right, in reaction to the headlines. And that's why we lean on the technicals, which I want to talk about, but kind of getting into that a little bit more and just peeling back another layer in terms of the fundamentals here, David. OPEC, you mentioned the significance in terms of the decisions they make, but now we're hearing about Angola coming out of the alliance. You've got EIA record production, right, expected here in the U.S. I mean, a complex environment, to say the least.
No doubt. The business with Angola, Angola makes maybe 1 million barrels per day.
Okay. So not a major player, but...
It's not a major player because really we're talking about 30 million barrels per day if you take the entire system. But, this was over a dispute on, I believe, on crude oil output quotas. And they don't want to be put under that. So they've left that. They're stepping out of OPEC. I don't know how much that really will affect or would affect the OPEC decision making for what they made in November, and I'm not sure that it would make much difference on the fundamental side of crude oil pricing. It's so small. But from our perspective, I do want to, if I may, I'd like to say something about the technical side because that's where we.
David, last thought again, also because we're talking a little bit about supplies here, I want to talk a little bit about the demand side before we get into the technicals and those key levels you're watching. China is this kind of unknown as we head into the end of the year. It has been, it continues to be. So you have this balance, I feel like, but a complex environment to say the least, and ultimately that's why we do lean on the technicals again.
Right. The whole thing with China throughout the whole year is that China is strong, China is weak, China's going to be strong, China is going to be weak. And at this point, China isn't doing so well. Now, they're going to continue to use crude oil. That's going to keep the business running. But there has to be a real vision fundamentally that higher prices are going to be coming. And maybe that vision hasn't really occurred yet. One of them is, of course, the November decision that we just spoke about for cutting their output in 2024. But there probably are going to be other things that come up in the meantime. That's maybe my best guess fundamentally is their November decision.
David, you're a technician at heart, right? Like myself, right? True to the levels, price is king. Obviously, the fundamentals are factored in, and we consider them, we focus on them, but we look to the charts. And I apologize, I was kind of holding you back there, so I'll release the leash here. I'll unleash you at this point. Talk to us about what you're watching as we see these fundamentals kind of providing that underlying support. Does it match up in terms of the technicals, the areas you're watching?
Yes, I'll tell you this. We were a little surprised that we did have to come back down and test the $70 level. And our position over many months has been, as long as the market, crude oil begins or continues to close monthly above $70 worst case, then we expect crude to trade back up at $86 to $87 by mid-2024 or sooner. It may come sooner. But right now, with them back near $75, if we close this month, which we're only a short time away from closing, if we close above $70, that is useful to this forecast. One other nearer term forecast that we have is that with crude continuing to close again at $70 or higher weekly, every week from now on, we expect crude back up at $78 to $79 in January. So we have a short-term forecast for $78 to $79 crude, maybe $5, $6 higher than we are now in January, and then a longer-term forecast for crude to be back up at 86 to 87 or higher as we get later in the year, somewhere between the first quarter and second quarter of this year, or of 2024.
I like that. I'm kind of looking at the same levels here right now. You've got a well-defined upper extreme, 95. You've got the lower extreme, 65, established this year, 80 being the middle. Build momentum through there. Ultimately, you do open up a door for a retest of those highs from this fall. David, before we brought you in, I was talking about levels. I was talking about the trends that we're seeing. The hourly, it seems to be to the upside, right, off 67 to 75 recently. The 4-hour seems to be the downside when you look at 95 down to 65. And then the daily, not a lot of conviction one way or the other, as we were just looking at here, holding below the 50-day moving average. But we had a crude bull on earlier in the week, and he seemed to push back a little bit. I was looking at the daily chart saying, hey, we've been range-bound and contained. He's bullish, this thing. It's been coming off from 95 down to 65. He's going, what do you mean contained? This has been a bloodbath. I mean, very important to be time frame specific when we're talking about these levels, these charts, these products.
Yeah, it's very much, this is maybe an old analogy, but it's very much like the ocean. If I look at the ocean, I can look at very small waves that are coming and crashing on the thing. I can also look at medium-sized waves, and I can look way out and see much, much larger waves.
Yeah.
So what you are looking at can, and many people do, get lost in the very, very small time frames. A lot of people are intraday based, and they literally don't know or are, in a way, blind to the larger forces that are occurring. And most of our work, we've learned over many, many years of doing this. Our company's been in business for 25 years. We've been around for a long time, and we've realized that you really have to understand what the larger picture is indicating first before moving down to the smaller picture, because the larger picture is going to be satisfied, even though the smaller picture may have some temporary hold on the market. It's the larger picture that's really going to finally get resolved. That larger wave is going to come in, and you can see it at a distance. It is going to come in, and it's going to wipe out all the small waves. So it's a really good idea to, if you're going to trade in markets, to be a multi-time frame study out of it. Make a multi-time frame study out of it and understand what the total ocean of prices is telling you, rather than just focusing on a single time frame.
David Williams, we appreciate your contribution you made to the Future Show here this year. David Williams, investor forecaster at Page Trader.